All right, everybody, welcome back. We are diving deep today
Into investing.
into investing, yeah. We're going to be taking a look at Benjamin Graham's The Intelligent Investor,
Mhm.
kind of a classic, huh?
Oh yeah. It's the value investing Bible.
The Bible, yeah, exactly.
Still relevant today,
Yeah,
even in this crazy market we're in.
I know, like crypto and meme stocks, can you imagine?
I don't think Graham could have even dreamed of that.
Yeah,
But his principles I think would still apply.
totally. And that's what we're going to get into. So
Yeah.
right off the bat, Graham talks about this huge difference between investing and speculating.
Yeah, he was really adamant about that. I mean, for him, investing was all about,
Yeah.
really serious analysis, right?
Yeah.
You dig deep into a company, you look at its intrinsic value, what it's actually worth.
You're not just like chasing hype.
Exactly. You're looking for long-term potential.
So like all that meme stock stuff.
Yeah. That would be speculation.
Totally. What about all the crypto craziness?
Probably lump that in there too. I mean, remember, Graham was all about this rational approach. Data, data, data.
He probably wouldn't touch anything like that with a 10-foot pole.
Probably not. He famously said, the investor's chief problem, and even his worst enemy, is likely to be himself.
Oh, deep.
Right. So he's talking about emotions. You got to keep those in check.
Oh, so true.
Uh-huh.
And speaking of keeping things in check, let's talk about Graham's famous margin of safety idea.
Yeah, this is a big one. Think of it like this. You're buying a house, right? You don't just blindly pay the asking price.
No way.
You do your research, get an appraisal, maybe even haggle a bit.
Absolutely.
So the margin of safety is like buying an asset for less than it's actually worth.
Makes sense.
It's that buffer, that cushion for if things go wrong.
So you're protected.
Exactly. Your analysis might be off or, the market could take a sudden dip.
And in today's market, do you think investors, are they actually paying attention to this?
I think some are, but it's easy to get caught up in the hype. Everybody wants those massive returns.
The instant gratification.
Yeah, but Graham would say, be patient, be disciplined. Real wealth, it builds gradually. It's a marathon, not a sprint.
Love that. And it's all about making those, what do we say, calculated.
Calculated, informed decisions.
Yeah. Yeah. But that's got to be tough with everyone screaming about stocks online and the news cycle going crazy 24/7.
I know, right? It's like a constant barrage of information.
What would Graham say about all that noise?
He'd probably tell you to tune it out. Seriously. Remember, emotions can lead to bad decisions. Fear and greed, those are the real enemies.
No, it's about staying focused on your research, on your goals.
Exactly. Block out the noise, focus on the fundamentals.
Makes sense. Now, Graham also talks about the difference between value investing and growth investing. What's the deal there?
So Graham was all about value investing. He loved finding these hidden gem companies that the market was undervaluing.
Undervalued meaning,
Meaning they're actually worth more than their current stock price suggests.
oh, I see.
Yeah. So these are often solid companies, good fundamentals, just maybe flying under the radar.
And growth investing.
Growth investing is more about focusing on companies with high growth potential.
So like the up-and-comers.
Yeah, exactly. Even if their valuations are high right now, the idea is they'll keep growing, keep disrupting.
So a lot of tech companies fall into that.
Definitely. And honestly, the lines can get a little blurry these days, but Graham's core principles like thorough analysis, understanding a company's real worth, those are still key.
No matter what you're investing in.
Absolutely.
Okay, so let's have some fun here. Imagine Graham suddenly pops into today's world. AI, algorithms, all this crazy technology. What do you think his reaction would be?
It's funny. Graham was a huge data nerd back in the day. I mean, he built his own spreadsheets by hand.
What? No way.
Yeah, so I think he'd be fascinated by AI, all the power it has to crunch numbers, analyze trends.
Right. Like think about Notebook LM. It can analyze markets, summarize earnings reports, all this stuff.
Yeah, it's insane. But here's the thing. I don't think Graham would see AI as a replacement for thinking for yourself.
Oh, interesting. So it's like it's a tool, not a crutch.
Exactly. Remember, Graham was all about independent analysis, understanding the why behind the numbers.
So he'd probably be like, use AI wisely, don't let it do your thinking for you.
Exactly.
That's spot on.
So it seems like the big takeaway from The Intelligent Investor is like this emphasis on a rational, disciplined approach.
Right.
Yeah.
Yeah, absolutely. It's about the long game, understanding value, managing risk, not letting your emotions take over.
Timeless stuff.
Totally. This book, it's a must read if you're serious about investing, I mean.
Couldn't agree more. And it makes me wonder, how do all these principles, how do they apply to like non-traditional assets?
Interesting.
Art, collectibles, maybe even like intellectual property. The world of investing is changing so fast.
It is, yeah. So, food for thought for everyone out there. How would Graham approach those new frontiers? Thanks for joining us on this deep dive, folks. It's been fun.
Yeah, always a good time.
Catch you next time.
See you later.